candianstrategy.com.
This is Christopher Lewis looking at the upcoming Friday, July 11th trading day, and on the economic calendar we have fairly light action. The new yuan loans coming out of China can move the market. I don't anticipate that it will, though, unless of course it's a massive miss. That can affect more along the lines of commodities and maybe the Australian dollar. It's kind of a knock-on effect as the Chinese economy may be slowing down, expanding, however that plays out. Nonetheless, though, do not look for much out of that during the session. We've got some minor money supply numbers coming out of China. Really shouldn't affect the market at all. And quite frankly, the major announcement for the session is going to be the employment numbers coming out of Ottawa. The Canadian employment numbers, of course, will have a massive effect on the Canadian dollar itself, but in the end, that's probably the only market that will be influenced by it. Perhaps some stocks that do a lot of business in Canada, maybe on the TSX or something. But nonetheless, that's really the only major outlier we have out there that could truthfully move the market with any significance. There is the German CPI, and that is expected to be at 1%. It was 1% last time. If that misses horribly, that might have a bit of a negative effect on the euro, as the ECB already looks likely to loosen monetary policy. But beyond that, we really don't see much in the way of economic announcements as far as moving the market. The candle for the Thursday session in the dollar-yen, as you can see, was pretty negative, but we found support at the 101 level, exactly where you would anticipate it. That being the case, we formed a little bit of a hammer, probably a bit ugly to call a hammer, but it does imply that the buyers are stepping in right around the 101 level, excuse me. With that in mind, I anticipate a bounce from here, probably back towards the 102 level. Look for shorter term supportive candles as possible buying opportunities. The British pound had a negative candle as well during the day, but much like the dollar-yen pair, it did bounce off the 1.71 level, which was support, is support, and continues to be support. Several hammers in a row tells me that there is significant buying pressure underneath, and if we can get above the 1.72 level, we should continue on to the 1.75 handle. The British pound has been very bullish, but as you can see, after an impulsive move, it wants to go sideways. Another impulsive move sideways, very common stair-stepping action. In the euro, we continue to be stuck right around the 1.36 handle, and as a result, this looks like a market that is going to be difficult to play with spot forex, but possibly the right binary options may be the way, perhaps a no-touch type deal. The market itself looks very tight, as the ECB looks likely to loosen monetary policy, and quite frankly, the Fed looks like it might tighten, but slower than originally anticipated. So that leads to a lot of confusion, and we are heading towards the quiet part of the summer, so we may be looking at the summer range between 1.35 and 1.37. And finally, looking over at the S&P 500, you can see that we did in fact fall during the session. But what I really like about this is that we found support right above this cluster here in about 1960 to form a perfect hammer. For me, this is probably the most bullish chart that I see right now, and I would suspect that a move above the top of this hammer has us heading back towards the 2000 level, which of course is a large psychologically significant barrier. But once we get above there, that could continue the next leg higher. This is a market that's obviously in an uptrend, really can't be shorted at this point, and I believe that every time we dip, the buyer should come back into the play. So very bullish looking market here. If we can clear the 1970 level, that should free up a run back towards the highs, which ultimately opens up the door to 2000.